Morning guys, Joel Frank here, market analyst for YouTrading, and today we're taking a look at the Euro Stoxx 50, which is an index of pretty much the top 50 stocks by market capitalization in the Eurozone. I've got it here on a daily chart. These are daily candles, and as you can see, doing pretty well, probing these recent highs, which actually are all-time highs. But as you can see in this box, this area just to the north of the 4K mark has the Stoxx 50 has been struggling with this area, okay, over the last couple of weeks, and potentially that means that when it does. If it does break more convincingly above this level, well, then we could see a bit of an accelerated spurt to the upside. If I just zoom out a little bit, I can show you that if you go all the way back to the pre-pandemic high, which was set in the pre-pandemic all-time highs, which were set back in February of 2020, well, that has been really strong support to the downside, as you can see there. With this square just here. So if we do see a bit of a reversal back from this area, which we've been struggling to get through, and we do go below the 21 DMA, which is in orange, the 50 DMA, which is there in blue, well then that is going to be a big area to be looking at, the previous all-time high prior to the pandemic. But in terms of fundamentals, how come the Euro Stoxx 50 has been doing pretty well recently? Well, optimism in the Eurozone regarding the state of the pandemic has been improving as of late. Infection rates have been going down, vaccination rates in the major Eurozone countries have been accelerating, and the EU certainly is catching up with the likes of the UK and the US in terms of the percentage of their populations that have now had at least one vaccine. And just note that having your first dose gives you most of the protection against the virus. So the fact that they're catching up with the UK and the US, who have given at least one dose to the majority of their populations now, means that the downside risk that the Eurozone economy faces, or the EU economy faces from the pandemic, is seemingly diminished. Obviously that's assuming the vaccines continue to work and reduce deaths, which they do seem to do at the moment. But anyway, all of this more sort of optimistic picture around the pandemic has been keeping the index well supported. I mean, hence why dip buyers were so keen to get in when it tested that previous pre-pandemic all-time high. All the while, in terms of the ECB, another key factor, obviously they have been very accommodative, which if I zoom out, ECB accommodation has been a key factor, just like Fed accommodation in the US, as to why Eurozone stocks, oh, I can't get the arrow, there it is, have been able to recover from last year's low all the way back up to fresh all-time high levels. ECB accommodation has been crucial in that. Even at the end of last quarter, the ECB signaled that they were going to increase on a temporary basis the pace of their asset purchase program, and it does seem likely that they're going to wind down the pace of their QE buying. But some of the ECB members have been not so keen on decelerating the pace of QE. So there's quite a lively debate about that. But all in all, ECB is going to remain very supportive for a very long time. So that should keep a floor under these markets as well. So what do I think is going to happen? Well, I think it's got to be said, we could face some short-term setbacks, perhaps another test of this level. But I think most likely the direction of least resistance is a slow grind to further upside, just like we kind of saw pretty much since the start of the year, this just slow grind higher. So yeah, guys, hope you enjoyed the video, and I'll see you all in the next one.